What's up everyone, it's Caddy with MoneyVest. So in this video we are going to be talking about the entire market. Ray Dalio came out with some comments. We did also have the personal consumption expenditure, so inflation numbers came out earlier yesterday, so I'm going to break that down as well. AMD was skyrocketing higher, up a little bit over 9% on ramping up some AI products. And of course, technology stocks here, once again, pushing higher. And we did have the markets kind of drifting back up to the upside. NASDAQ hitting a new all-time high at over 16,000 points. We got lots to unpack and lots to cover in this market update. As always, if you enjoy this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. The links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. It's the first week of the month is usually the best time to join. So again, links going to be down below, and you will get access to all the trade alerts and the trade ideas and options alerts, as well as our moneyvest.com platform that's going to be available at the end of this month, and with a lot of features and a lot of really exciting and interesting opportunities for you to look at, different calculators and models to play with, so that you can make the most informed, best investment decision for yourself with confidence with our MoneyVest metrics that is going to be looking at over 100 checkpoints of every single company and stock out there. So we're very excited to launch this. A lot of our teams have been working pretty hard for this over the next month. We've got some more things to do and some more things to kind of test out, and we'll be ready for that soft launch among members only and to get a lot of your feedback. Also, do connect with me on Instagram. My handle is going to be CastWRP. I do post a lot of interesting stories and portfolio updates and profit and losses and polls and tips and strategies, all that stuff. So link's going to be down below if you want to connect with me there also. So NASDAQ closes at a record high. So very, very strong move to the upside from the NASDAQ. So if you come over to the IXIC, that's a NASDAQ composite, trading up to almost 16,100, up over 90 basis points. The NASDAQ 100, which is NDX, also pushing higher to over 18,000, and of course S&P 500 trading at well over 5,096, so almost 5,100. Once again, pushing up over 0.5% as well. So stock market doesn't look very bubbly to billionaire investor Ray Dalio, and that's exactly what we talked about in one of my previous videos. It's kind of funny that this article is coming out. Ray Dalio is coming out and voicing his opinion after the fact that we already discussed this, because there was another market expert and analyst talking about how the markets are in a bubble, which I did mention that they are not. I don't believe that they are, because this market is being compared to the 1999 dot-com bubble, and this is a very, very different market environment. We are not in that same situation, because a lot of these companies that we have talked about are backed with some very profitable earnings and revenues and company cash flows that, to me, they don't seem like they're in a bubble territory. Yes, they might be trading at a very premium valuation, a very expensive valuation, so to speak, but talking about them collectively and even on an aggregate basis for the entire market, it kind of seems like it is a bit frothy. It is a little bit euphoric out there. There's a lot of greed, but there is no signs of a bubble in the market. So Ray Dalio, founder hedge fund Titan Bridgewater Associates, on Thursday mentioned in a LinkedIn post that bubble talk appears misplaced according to his 6-part checklist, and he breaks down the criteria for his bubble gauge: high prices relative to traditional measures of value, taking the present value of their cash flows for the duration of the asset and comparing it with their interest rates, unsustainable conditions, many new and naive buyers who are attracted because the markets have gone up, broad bullish sentiment, a lot of the purchases being financed by debt, and a lot of forward and speculative purchases made to bet on the price gains. A lot of that, he doesn't see that at the moment in the market. Some of those, yes, maybe you could argue that there is a lot of speculation among chip stocks and semiconductors and Nvidia and AMD and a lot of these AI-infused companies. But on a broad basis, on a broadly speaking, there is that lack of euphoria and that greed, which doesn't make me believe, at least, that we're in a bubble. So in other words, this kind of seems like a little bit more reasonable as opposed to looking at it from a very, very overvalued and rich perspective. So based on Dalio's equity bubble gauge, the market right now is in the middle of the range at the 52nd percentile, a level that hasn't been associated with the past bubbles seen charts. So this right here is going to be the bubble, market bubble gauge, US market bubble. And of course, we have seen us back in 2022. We were kind of in that bubble territory. Then we saw a bear market. We kind of see that bubble kind of deflate. And right now we're kind of moving back higher, but we're nowhere near close to that levels just yet. Now, AMD stock, of course, pushing higher, ramps up on AI chip production. So a significant move to the upside for advanced micro devices, pushing up over 9%. But more importantly, we did have the personal consumption expenditure. We did have the actual inflation numbers come out. So 1% increase month over month for personal income. Personal consumption expenditure, so month over month PCE, increasing by 0.2%. Consensus was 0.2% also, so kind of hitting expectations. Price index month over month up 0.3%, in line with expectations. Year over year 2.4%, and more importantly, core inflation, so core PCE, was also meeting expectations of 2.8%, which again is still a little bit higher than the Fed's target. But the bottom line is that it's showing progress. It's down from 2.9 to 2.8%. So that is exactly what we are witnessing, progress among personal consumption expenditure, which is the PCE, core PCE, more specifically the Fed's preferred measure of inflation. When it comes to interest rates, markets pricing in 3 to 4 rate cuts in 2024 as far as 2025. So this right here is the entire expectations for interest rates for us to go down from 5.25, 5.5% down to 4.25 and 4.5% all the way through March of 25. So 4 rate cuts are being priced in at the moment from Federal Reserve. This right here is going to be technology, of course, communication services, green, a lot of sectors pushing higher with healthcare, consumer defensives, financials, and of course industrial, real estate, energy, all of them pulling back. So the entire market, of course, mostly green on the back of technology, which was once again pushing higher, and a lot of those sectors, consumer defensive, healthcare, we got financials, we got real estate, energy, basic materials, utilities selling off here on the day. So again, very, very green day yesterday for the market, with consumer defensive and healthcare pulling back. In the last 1 week, of course, most sectors are green. Energy, healthcare, communication services down. And in the last 1 month, of course, most sectors are green, with energy and comm services selling off as well. With cocoa prices pushing higher, we got Nikkei 225, coffee prices pushing up, feeder cattle and sugar prices were lower, with Bitcoin pushing back up to over 61,000 and Ether just over $3,300 as well. If you come over to volatility, so VIX here, once again, pretty low and muted at just under 14. So again, we've been watching this range between about 12 to 15 for quite some time. This right here, lots of consolidation in between that range. And this red rectangle is going to be a very, very important level to watch between 11 and 12. And of course, 15 all the way up to 18 to 20 is where I would like to start dollar cost averaging a little bit more aggressively. We'll start to turn the dial to be a bigger buyer in the markets moving forward. And crude oil really is starting to push right back up. So this is a little bit more concerning because we're back up to that resistance at $79, $80 a share. And if we do end up, let's say, breaking out above that, $80, $81 is going to be that next target and that next resistance to watch, with a very strong support sitting in the low 70s for crude oil as well. Talking a little bit about Bitcoin now. Bitcoin just over 62,000, continues to move higher, but I would reiterate how overbought it really is at the moment. We've continued to kind of rally and rip through. This right here is a resistance that it's coming up to now at $69,000 to $70,000, pretty much the all-time high. And support level is going to stay put inside this green rectangle between $47,000 and $51,000 for Bitcoin. For Ether, once again, we're coming up to that resistance of 3,600 with a very strong support inside this green rectangle between 2,100 and 2,400 for Ether as well, with a very, very overbought RSI at the moment as well. So when it comes to individual stocks and the markets, I will be doing our technical analysis on all these stocks, all these companies in a more separate, more detailed video. That is going to be dedicated in a separate video. I'll be going over all the Magnificent 7 FANG stocks, as well as PayPal and Visa and Enphase and all these other companies. So that is going to be for a different video. But this video, I just wanted to keep it very simple, going over the market updates, talking a little bit about where we are overbought, of course, from a technical perspective. Ray Dalio and my views are kind of very similar. Go over the personal consumption expenditure, the inflation numbers. And the bottom line is that this is still a market that is being powered on the back of this generative AI. And a lot of euphoria, a lot of greed, a lot of bullish momentum for Magnificent 7 companies and stocks that are continuing to push higher. Microsoft, Nvidia, AMD, Amazon, Google, Meta, even Apple to some extent. Of course, we did have Salesforce pushing up a little bit over 3%. But the bottom line is these are the stocks, these are the names that are really just charging this market higher to new all-time highs. And there is some lack of participation from other sectors. And this is not a broad-based rally, but rather a very concentrated rally. So we have to be very cautious and very aware of the situation that we're currently in, while at the same time I'm looking at raising more cash, raising more capital, so that I'm aware of if and when there is a pullback, I'm ready to start deploying cash further once again. and be a little bit more aggressive when it comes to dollar cost averaging back into the market. So hope you all enjoy this video and a complete update on the markets here. Like I said, I will be going over all the technical analysis on these Magnificent 7 stocks in a more separate, more dedicated video. Our newsletter is going to be coming out on Sunday with a full detailed analysis on inflation, on interest rates, with some potential swing trading ideas as well. So if that's something that you're interested in, tradable and investable opportunities, link's going to be down below if you want to access our newsletter as well. Make sure that you drop a like, subscribe to the channel. Happy investing, and I'll see you all in the next video.